Hi everyone, I'm here with Paul Thompson with HomeStreet Bank. Paul, are you saying, are customers still afraid that they won't qualify for a home loan these days?
You know, that's a really good question, and honestly, I get that all the time. I get these comments from customers, even apprehensive about applying because they feel like they're not going to qualify. And a lot of it has to do with prior bankruptcies they may have had, or a prior short sale or foreclosure, or maybe they feel their credit score is not high enough. What is really good news recently is that we just lowered our credit score requirements now down to 600.
Wow.
So if somebody wants to qualify for FHA or VA financing, they can be as low as a 600 FICO score and possibly get approved for financing. And so what I have been finding in the last 6 months or so from people I was taking applications on that were, let's say, 580s, 590s or so, I'm calling these same people back and asking them to come back to me because they may be now in the 600 range. Maybe not 620, but maybe if they're between 600 and 619, now they can get into a home possibly.
So a person could actually do 100% financing with a VA loan with a 600 credit score?
That's right.
Wow. Well, that's good news. I'm glad that the market's turning and allowing people to get back into homes that thought they might have been locked out of. So Paul, how long does it take to fix somebody's credit score?
I get that question a lot, and it really varies depending on the situation, but I can tell you and I can tell others the quickest way to boost your score up by many, many points in a short period of time is if you have a lot of revolving debt, for example, credit cards that are near their maximum credit limit. If somebody can get those paid down to 20% of their limit or less, if they do that on one or two cards, sometimes that can boost their score up 15 to 20 points.
Wow, that's helpful.
So for example, let's say somebody has a $2,000 credit limit and their balance is $1,600. If they can get that card paid down to $400 balance, which is 20% of their limit, get that card paid down, give me the updated statement. Don't close the account. That's the important thing. Do not close the account, because when you close an account, that reduces your available credit, and that'll actually bring down your score. So we'll have to keep that account open. But with that new information, I can do what's called a rapid rescore, and generally within 2 to 3 days, I get a new score, and many times it's where it needs to be. I mean, I've got a gentleman right now that just got approved with me for a conventional loan. He came to me with a 602 score, and I looked at his credit. There was a revolving account that had, I think, a $4,000 credit limit, and he had $3,800 balance on it. He had mentioned to me that he just paid it down to a $500 balance. He provided me the update, sent it into our credit reporting company. Lo and behold, within 3 days, his score jumped to a 622.
Perfect.
And for a conventional loan, all you need is a 620 or better to qualify. So this guy, obviously, he's ecstatic. He got his offer accepted yesterday.
One
So
more
we're
happy
good to go.
owner.
Exactly. So, Mark, given that you do reverse mortgages and you deal with a lot of seniors, or predominantly seniors, are you finding that people, seniors in particular, are outliving their retirement?
Well, yeah, Paul, we're seeing that a lot. Where people, this day and age, people are not retiring with defined benefit programs that they did in the past, where you had a guaranteed retirement pension. A lot of people are just retiring on their own self-funded retirement, 401ks, IRAs, Social Security. And when that starts to run out, especially if the market is shifty, if the market's hurting their retirement portfolio, they're going to run out of cash, and it's not going to make it all the way through their retirement years. That's where a reverse mortgage can really come in and save the day for somebody. You've got all this equity built up in your home that you've worked hard to earn, and now you can use that retirement or that home equity as some additional retirement income. And in many cases, we can see people adding to their retirement cash flow, extending it another 20%, or giving them maybe an extra 8 or 10 years by using the reverse mortgage. And that's a lot of people don't know a reverse mortgage can do that. That's exactly what it was designed to do. And it's been helping people for many, many years.
No, that's really good information, and it's really encouraging to know that seniors have these kind of options. And most of them are not even aware of this, that they can have other methods of cash flow besides their investments and their pension and their Social Security. So that's good. That's really good info.
Mark, after a homeowner takes out a reverse mortgage, say 10, 12 years down the road they need to sell, will they have equity in their home at that time?
Well, that's a good question, John. A lot of people worry about that with a reverse mortgage, that if I do a reverse mortgage, the bank's going to own my home. Well, for starters, the bank doesn't own your home. The home is going to be owned by the homeowner, and they're going to have ownership rights to all that equity. And in most cases, what we're seeing, especially with the new changes that FHA made, homeowners are actually preserving their equity even longer with a reverse mortgage. So what we're seeing is people, after they've been in a loan for 10, 12, 15 years, they could still have many thousands of dollars of equity left over. And any of that equity that's left over when they sell the home, that goes right to the homeowner. So there's no need to worry about running out of equity. In fact, I'm seeing cases where people take out a reverse mortgage in their mid to late 60s and still, all the way into the late 80s, early 90s, still having equity left in their home. And that gives people some reassurance that the reverse mortgage is a very safe program for them to use.
So John, you've been in real estate for a long time. I mean, I know it's now a seller's market. So what does that mean for home buyers?
In a normal market, we say there's about 6 months of inventory available. That
Okay.
means for all the homes that are available in the market right now, at the current rate of offers and accepted offers going into escrow, it'll take 6 months for that inventory to go to zero.
Okay.
But currently, the RMLS is showing about 3.2 months of inventory for resale
Wow.
home. And then when I further remove short sales, because most of those already have an offer on them, just waiting for bank approval, it goes down to 2.8 months, which is
Goodness.
very little inventory to choose from. So what home buyers must keep in mind, especially if they're just coming into the market, is of course talk to you first to get financially qualified, because you're competing with cash buyers. A lot of these investors are looking for the last good deals out there, and if you're not qualified or haven't even started that process, you'll be shut out of those opportunities. Next thing that's most important is know what you want, know the neighborhoods, know the type of home, and then get up on a custom home search so that you can be alerted immediately when a home becomes available and the home has the right price, the right features, that you can look at it online, go drive by it, give me a call, and we'll get you inside and see if that's the home you want to make an offer on. Because some of the better homes are going in just a few short days on the market.
That's good information. It's really important to be proactive. There's no doubt about that.
Absolutely. It's a must-do in today's
Right.
market.
I appreciate that. It's good information.